What's up, guys? Today we're going to be doing a video on actually how to increase your profitability, how to increase your win rate. And I think this is so important because I see so many traders failing in this aspect, which is essentially costing them money and wasting their time as well when they, trying to get into funded accounts, when they're trying to even just make money on their private capital too. So I'm super excited to get into this. It's been requested quite a few times. I think I'm going to start doing this more and more as we get into our YouTube channel. So make sure to like, subscribe because we're going to be giving a lot of content, a lot of information out there that can definitely help you and that you can learn from, not just in the trading space, but it's in the stock, crypto, and investing space, which is super, super cool. So for starters, let's just jump into what we've set out here. We're going to be going through a Miro board that I've set out for you guys. So essentially, how to get your win percent higher, right? So essentially, what we need to focus on, and the first and foremost aspect we need to realize is what is our goals when it comes to trading. So we need to identify why are we trading. So the good things or the good goals we could look at is you are looking to buy back time, you are looking to trade full time, you are wanting to make an extra income, you are wanting to learn a skill that can help you invest, you are looking to expand your capital. You are wanting to pass on a skill to your children that don't teach you in school. You're wanting to build a long-term business out of trading. The outcome, you will have the right mindset coming into trading and you will essentially make money. The bad goals would be looking at you're trying to flip an account, you're looking to make quick money, you don't want to make the bad goals are such as you are trying to flip an account, you're looking to make quick money, you don't want to take a single loss in the market, you have an idea that as soon as I make profits, you want to quit your job, you are just wanting to follow signals and make money, you are looking to find the easiest way to make quick money in the markets, such as bots, signals, maybe taking risky trades or flipping accounts. Outcome, you will lose more than what you make. And this is so important when actually identifying the goals that you're trying to get and have when jumping into trading, because this is not something that you can just learn overnight. It is something that you have to put time into and really, really study it. I mean, doctors and lawyers making 6, 7 figures, but after studying for 6 to 7 years. So we need to understand that the correct knowledge is vitally important. The study and dedication to it is vitally important, and building data. And we're going to get into that now in my report. So essentially, the next step that we can essentially look at is again, how to increase your win percentage, but there are two components to this. So the first and foremost component would be a trading plan, right? Now we need to break this down because a lot of people don't actually know how to build a trading plan. So essentially, what we can first look at is what are the instruments that you're trading, right? This is formally in your trading plan that you should actually create one if you haven't already. What I always suggest is not trying to trade every single market. Not trying to go into 20 different pairs simply because you're going to confuse yourself. You're never going to be able to find the correct ideas. There's just going to be so much chaos that's going on, so many markets that are moving that you're not able to build up proper data and more homework when you're journaling your trades. And we're going to get into that further. So I'd usually suggest pick 6 max instruments that you want to trade. You can either split it up by 3 forex, 2 indices and 1 commodity, or maybe 2 commodities and 1 indice that you should look at, right? The next thing we should look at is identifying what type of trader you are. Now, we have scalping, we have day trader, and we have swing trader, right? So essentially, what you should be looking at when you're looking at scalping is time. So essentially, when you're jumping into a trade, you should be holding it about 15 to 45 minutes max in that trade because you are scalping the markets, right? Risk reward, you should be aiming for 1 to 2 and 1 to 3. Not anything higher than that. Then I think you're just being a bit greedy. The goal is to manage your risk quickly, managing your positions quickly, because in scalping, there's a lot of movement that can happen in 15 to 45 minutes. We can get news, price can jump up and down. There's just a lot that can go on. So I think it's important to manage your positions and risk effectively. Otherwise, that can cost you money too, right? We have day trader here, 45 minutes to 3 hours. That's usually the time of trade that you're going to be taking. Anything longer than that, then you're sitting at the charts for way too long. And essentially this can, definitely set you back, right? Risk reward, again, you'll see I'm always trying to focus on hitting one to twos, one to threes, and one to fours, right? The goal is to let the trade breathe, let price do its thing. People understand when you are trying to be a day trader, you're trying to take profits very quickly, you're not letting the trade have room to breathe. Keep in mind, you're trading throughout the session. That's what a day trader is. Scalping is within the session, but it's shorter time period. So you got to let the trade breathe out in the session that you're currently trading, whether it be London, New York or Asian session. Let the trade breathe in that market. Otherwise, you're going to be costing yourself more money where you could have closed out the trade and it actually had potential to run up further upwards or down, So that's important to identify. Swing traders, this is where you are holding a trade 5 hours or much longer, essentially because one, you might be busy, or two, you just generally have the patience. Most people that have patience are swing traders. I'm personally in between a scalper and a day trader. So essentially, I'm not swing trading my positions. But then again, you can be holding from 5 hours to even a month, on some trade ideas that you've set out. But this leaves room for smaller lot sizes, bigger stop losses, and maybe bigger targets too. So you're not going to be hitting your targets within the first hour or 2 hours unless there's obviously major impact news. But essentially, this is what's going to take a little bit longer. So if you feel you have a lot more patience in the market, you can take some positions for long term, then essentially definitely run into a swing trader. As I said, I'm personally a day trader and a scalper where I can identify my patience is not as long. So I am taking trades very shortly too, within the 45 to 3 hours time frame, right? The next thing would be time and availability. This is so important to identify simply because as traders, we don't want to be sitting on the markets for 3, 4, 5 hours, and watching it like a job. First of all, and second of all, a lot of people that are following me and a lot of people that I've spoken to are still working jobs at the moment, 9 to 5s. They might even be studying. So it's important to identify this. And this is essentially why it's going to help you identify what trader you should actually be, right? So working a 9 to 5 in the office. Now, this can vary between different ones. As you can see, it goes all up and down a bit. But essentially, you should be focusing on trying to be a swing trader if you have the patience, right? And the next one would be a scalping trader. So during your breaks of work, you have set up your analysis. You take in between 15 to 45 minutes a trade. Scalping could work for you. Or you can be a swing trader, set up your analysis the night before and wait within the week for your setup to actually come into play and your entry criteria to be met. Then you can enter a position. You don't have to focus on your trade and you can let it run while you're at work, right? The next thing would be working from home. This is an amazing place because you can go into any different type of trading style that you want to be. If you want to be a scalper, day trader, or swing trader, you have the time. And this might not mean work, and it could also mean studying from home. So essentially, I work from home, I'm trading from home, so I'm a full-time day trader. So I can be anyone, but again, it comes down to personality too. And then again, your time availability in the day. How much time do you actually want to spend on the markets? How much days do you want to spend in the market during that week? That's just important to identify. Let's take a little break. Let's take a breather. Okay, and I just want to make sure this thing is testing. There we go, it is working. Okay, so working from home, you decide which type of trader you want to be. You can effectively actually manage your time really well if you are, okay, cut that out, yeah. Next thing would be owning your business. This also can vary between different types of businesses that you're running and also the time constraint it has on you. So essentially, I would say if you own your business, you can sit anywhere between the day trader or scalping trader style because then at least you can focus on your business as that's your main and generating income. You don't want to take time away from something that is making you money right now. And then essentially you can sit between 45 minutes to 3 hours on a trade because again, you are the boss. So that's really, really good. And if you can see that you don't have much time in your day and you may be a construction worker or own a construction business, scalping is another direction that you can take. So again, the whole importance about this is to your availability, the dedication that you are able to give to the markets on a day-to-day basis when looking at the time that you have available and the type of style of trading that you want to go into. And then again, as I said, briefly describe the time that you should be spending in each trading session. Now, don't get me wrong, some trades run over, for a few minutes. That's perfectly fine. As long as the trade is, in profits, you can set your stop loss at break even or manage your position or cut it at an early loss or set it and let it be. Okay. The next thing we want to be looking at is how many trades you should be taking. The next thing you want to be looking at is how many trades you should be taking in a week. Now, a lot of traders I see are taking about 20 trades a day or even, 5 trades a day, which is a lot. You might not think it is, but it really, really is. No. So this is where I get why most traders mess up because they are taking way too many trades in a day, whereas you should be taking 1 to 3 to 4 trades max a week. This is vitally important because more trades don't mean more profits. It means more risk. And that's what we need to identify. And to be honest, I've never really seen 20 different setups in a single day, that are A grade, and I grade my ideas, and we're going to get into that now. But grading ideas, I haven't seen any day that there's so many opportunities in the market unless you are just, not really following your trading plan. So I take 1 to 3 max a week and sometimes no trades a week because nothing follows my entry criterias. It's just important to identify what days are you most free. Don't trade on days that you're busy because your trading is a peak performance game. If you are so focused on many different things, your baby's crying if you're working from home and you're trying to treat your baby, or whatever the case may be, you're working and your boss is always on your case. Essentially, those are the days where you kind of want to step back from the market, let your mind rest because you're going to be all over the place. And again, it's a peak performance game and you're going to take trades that are not following your entry criteria, which is very, very important. I think this is actually a very interesting one, as a lot of people don't understand it. What session to trade? Do not trade all sessions. I see a lot of guys trading London, New York, Asian session, all the sessions. They might make money in London, they might make money in New York, but then Asian, they lose everything. Or they might lose London, trade New York, make a bit of money, and then Asian lose everything again. It's essentially stick to trading 1 to 2 sessions. Well, it's important to stick to 1 session a day. That's what I like to do, especially when I've made profits, because you don't want to give your profits back to the market. So let's just break it down here. So London session, it opens at 9 a.m. and closes at 5 p.m. Now, again, this is correlating to how much time you have available. Are you working from home? Are you working to a 9 to 5? See where your schedule can align with your trading as well. So the volume in London session mainly picks up at 9 o'clock in the morning till 11. That's where I've seen most volume in the trades that I've taken, and pairs that you can trade is Euro USD, GBP USD, GBP JPY, gold, DAX 40. DAX 40 is a German and European stock indice. So that's really great to obviously watch in the mornings. Keep in mind anything that is euro or GBP, you can trade, but trade necessarily to where the volume is because volume equals money, right? And money flowing into the market where you don't want to be, if you are trying to trade, an exotic pair that doesn't have much volume and you are trying to be a scalp trader, you're going to find yourself sitting on the charts for a lot longer than you're supposed to. So that's very important to identify. Choosing the right pairs in the right session. Now we have New York session here. Obviously, most of you guys know 3 p.m. to 11 p.m. That's where it closes, right? And volume is usually between 3:30 p.m. to about 6:30 p.m. Stick between these time frames, stick between where the volume's at. Don't trade exit volume because then you start to see the market just, move sideways, which is very, very important to understand, right? Just gonna make my camera focus again. And the pairs that you can trade is Euro USD, GBP USD. And why do I say those two pairs again? Because we have the Euro and we have the dollar in it. So that's super cool. You can trade in both sessions as well. If the setup did not, play out in London, it potentially could have set up in New York as well. So that's why I say stick to 1 session, be patient, wait for your entry criteria to be met. Gold, US 30, NASDAQ, etc. Right? Then we have Asian session, opens at 2 a.m., closes at 10 a.m. Volume is at 2 a.m. to about 4 a.m. pairs that you can trade is any JPY pair, USD JPY, GBP JPY. And why we should not trade it? No, because the times are not good. We're not going to have a good sleeping schedule, and that's very, very important to understand. Otherwise, as I said, it's a peak performance game. If you're half asleep trying to take a trade, you're really going to start messing up. Now, the next thing is trading strategy. Okay, so we're going to get deep into this. I'm just going to briefly go over it. Having an entry criteria, trade confirmations and confluences, exit criteria. That's an important one. Having a playbook of my A grade setups, sticking to my rules, and management criteria. Now, we have a lot of criteria that we're speaking about here. Having an entry criteria, obviously, all your confluences that must align in order for you to enter that position. And exit criteria is also important. The trade's not going your way. You don't have to take a full stop. We're going to get into that now again. But then management criteria. You can trail your stop, put your stop at break even, put your stop in profit when the market is moving up in your direction. That's very, very good and important to use. Now, another thing is report cards. Now, Kale, what is so good about report cards? Why should we use it? And again, this is why most people will fail in their. The next thing is report cards, and this is so important to identify because a lot of people mislead this thing or they do not. Okay, retake that again, Kale. Report cards is the next thing that we're going to be going over, and it's so important to use this, and a lot of people don't even understand why or what it is. So we use this for our students, and it's very important because we need to identify how our performance is doing. That's what a daily report card is. So, for example, I've got a few um, criterias and things that we can go over here. Quick risk mitigation before stop loss. The description is managing risk effectively and optimal, right? So we're going to score ourselves out of 5, and for the week, 25 for the week. So essentially, if the positions that I'm taking on Monday and I did really well at mitigating and managing my risk as best as possible, I'm going to grade myself a 4 out of 5. I'm going to grade myself a 4 out of 5, right? Then we also have another example here, good execution, entering and exiting at correct price. Really, really interesting too. Are you entering your positions correctly? Are you being patient when you're supposed to enter? Are you waiting for your entry criteria to be met? Then what you can do is you can grade yourself on that idea. So what a report card does, and we're going to go into why it's important is they help us break down to see where our mistakes are. And this is in terms of not maybe technicals, but entry criteria, managing criteria, psychological review. You know, are you having good executions? This is very, very important. They also help us grade our trading week. How was our trading week? Okay, if we are hitting zeros the whole week, clearly we're not doing something right. Okay, and then if you're fighting with our spouse, we can say psychology review. What is our emotional state? Zero, zero, zero. Okay, clearly there was something going on this week. I know for next time when I'm having this situation, let's say I'm fighting with my spouse, then I'm definitely not going to trade because it affected my trading performance. It helps us identify where we can improve even in winning trades. So we could have had a profitable week, right? A profitable week, but our grades might not be as good. So we could have taken a crappy trade and still given us a one score, and we would have hit profit, but still give us a 1 out of 5 for our good execution model. So we can still make money, but there are still areas to improve. Help us stick to our trading plan. Now, a nice thing is too is we help our students grade their week and their months so that we can see, are we improving, are we making progress in this area. Okay, so this is just a brief explanation. There are a lot more towards a trading plan. I definitely suggest that you start to create one because it's helped not only me but my students profitability continuously grow as well because we're reflecting on where we can improve, right? The next thing would be data and confluences. Now, entry criteria. I see so many guys, watching a YouTube video, but they don't have data or know the correct entry. I see so many guys watching YouTube videos and trying to understand how to actually enter. I see so many guys. Let me just do this again. So the next thing we're going to be talking about is data and confluences. Now, this is vitally important because a lot of people are still watching YouTube videos and just taking trades and not really building any not really building any data behind what they're doing, and understand their entry model to the T. And it's so important to have that because what are we going to do? It's so important to have, otherwise, you are entering trades out of hope and not confidence. And if we are entering trades out of hope and not confidence, we start to see our mentality and our psychology towards trading drop, and our confidence in ourselves to take position drop too. How are we going to feel if we've been losing the whole time because we don't really understand our entry criteria? Our psychology is going to go down, and we possibly might even, you know, forget trading and never go back into it. What does it look like? So, what does having a proper educational entry criteria that you've learned how to look like? So, myself and my team, we've broken down every single step, so not just the broad aspect of our entry model, we've broken down every single step and criteria that we are looking for in our strategy for us to enter that position. So frameworks, the key levels, and we've done a little video. So not only that my students can go watch it, but I can watch it myself too, just to make sure. Okay. So value areas, execution model, trade breakdowns. We have a currency playbook, indice playbook, commodities playbook, trade management, system and processes, index correlation, session data, trade selectivity, and edge fill. Okay, so this is so important. We have broken down each section of our confluences so we know exactly what we're looking for in the markets to meet our entry criteria. So again, if you understand your entry criteria to the T, executing is not going to be as difficult. Not only that, you can actually identify when you should or when you shouldn't enter position. And if you're still entering positions when you know you shouldn't, then that's a problem when you're sticking to this, your trading plan. So it's important to definitely understand what you should be looking at and build data behind it. So the way, now let's get into how you can actually build data behind your trade ideas, again, to increase your win percentage. The first thing is playbooks. Now, Kale, what is a playbook? Can you explain it to me? Now, this is so important, and we built data over the 7 years that I've been trading currently. And again, the market's not going to look the same every single day. Of course it doesn't. But what is consistent? If we pull to our strategy because it's proven data, we can execute on different circumstances with the same entry model. So here's just different examples of us taking positions with the same entry criteria and it working out by following our rules. So here was a GBP JPY. Here's another GBP JPY following the exact same rules of breakout, and we're going to get into a bit of chart time after this. GBP USD again following our rules, trades hitting. Here's a sell, GBP USD again following our rules, hitting profits. So now what we are basically doing is we are building a playbook on A plus setup, so where it follows all our confluences to the T, right? And we're going to get into grading ideas. So this would be A plus setups that we can put on our playbook to say, if out of 10 trades we take this position, we're going to be losing about 2 out of 10, or 3 out of 10, and still having a 70% win rate on A plus grade ideas. Again, that's putting probability in our favor. That is putting win percentage already up just on our playbook and following our entry criteria. So again, if you've been following, you can see these are exercise ways that you can really start to take your exponential. These are, if you guys have been following, this is ways that you can see your profitability rate already increasing, right? The next thing would be building data, right? Okay, so the first thing is risk management protocols. So the goals essentially would be, the goal to manage risk is simple. Focus on hitting realistic risk rewards. This is not hitting 1 to 8s, 1 to 15s. Yes, I'm not saying it's not a possibility. Of course, there's been times where I've caught it myself, but that's just holding size and putting stop loss at break even. Ideally, if you can catch 1 to 2s and 1 to 3s and have a good win percentage with everything I've discussed with you, you'll already see your win percentage go up, right? Because this is consistent, right? Risk based on your count size in percentage. So usually you should be risking 1 to 2% max per trade. Now, the reason why we say this is because I can lose out of 10 trades, 7 trades in a row, I'll be risking 1% per position, right? I'll be 7% down. I'll make 3% on a single position. I'll be 2% profitable. Why? 7% down, 3 trades I took, 3, 6, 9, 9% up. We can still be saying 2% up profitable for the month, right? Which is great out of 10 trades. Calculating your lot size with stop loss before entering, calculating your positions and managing your risk is very important because you don't want this thing out of hope. You're following your rules, so call it, but you're not following your entry rules towards what size and lot size you should be using. And this can cost you a lot more money than what it's supposed to, right? And you might win, but one single trade that you are not calculating your lot size correctly can cost you all your profits. Pro your stop loss, very important. Take profits when it hits your TP. Don't be greedy. I see so many guys hitting their take profit. I message them 20 minutes later. No, it went back down. I didn't close the position. This is what's costing you money, guys. Close your position at the right time. Stop being greedy because if you continuously do this, your profitability rate will increase. You'll make more money over time. Don't focus on trying to hit, you were aiming for 3%. Don't try and aim for 6% now because you think price is going to continue. You just have to take another trade and hit 3% and you already make it 6. So you're risking 6 to maybe make less than 3 or maybe make 3. There's always ways that you can manage it, but essentially let's just stick to hitting your take profits at the right time, right? Manage your positions where you don't have to take a full stop. This is what I was talking about. For example, let's say we are in a position, right? And price is starting to run higher. We entered our buy and we over at this point here. Okay. But then price starts to fall down at this point here, right? Did our TP was up here and we were still managing our position. What we can do is we can put our stop loss at this level here so that even if price comes down, we're not going to take that 1% loss. Yes, it's sucky to take a loss, but there are losses in the market. I would rather take a 0.2% loss than a 1% loss completely at this level. So that's important to understand too. So managing your stop loss as best as possible and managing your position before it even hits your stop is also a great way to save yourself money, right? Next thing would be grading your ideas. Now, I've been speaking about grading. So essentially, this is what is increasing my profitability already because I'm focusing on hitting A plus grade and A grade setups. So essentially, what A plus grade setups are 5 to 6 confluences following my entry criteria. A grade is 3 to 4 confluences. E grade is 2 to 3 confluences, and then C grade is 0 to 1 confluence, which is essentially why it's red. We stay away from it, right? Why is it important to grade your trade ideas? You will identify if you look for A grade or A plus setups or A grade setups, your win percentage will go up. You'll become more patient on your trades, taking according to your graded trade. You will become more patient on the trades that you're taking according to the grades that you are looking at. And essentially, as I said, if you're taking A plus and A grade setups, you know those setups do work because of one, your playbook, two, your journal system, and three, your data that you have provided yourself. And if you can just stick to that, you'll see you'll make a lot more money than trying to take these B grade and C grade ideas. It's also very important to understand equity. So sometimes there's not always going to be an A plus or A grade setup, but I'll only take a B grade idea because that's still 2 to 3 confluences if my equity curve is growing. For example, right, for let's say June this month, our equity curve was constantly growing. So that's because I took A plus setups, right? A plus setups and A grade setups, and I only had to take maybe 5 trades. Okay. Now let's say the new month that we're going into, our flat, we've been flat the whole time. Okay. Then I'm not going to be taking any B grade setups. Why? Because I know my profitability, my win percentage is going to be down if we take a loss. Then our equity curve is going to go down for starters and in the beginning of the month. What I don't mind taking B grade ideas is if we have the month where we've already started on A grade or A plus, right? One of the two. We've hit a good equity curve growth within the month. Now there's a B grade setup that comes. If we take a small little loss, we can either not go to full break even, or we can take a smaller loss and be perfectly fine. or there's another outcome, it can actually start to grow up again because of a B grade. I don't want to take B grade ideas when I'm flat for the month. I don't mind taking B grade ideas when I've at least seen my equity curve grow a little bit. But if I've hit A plus A grade setups the whole month and taking maybe five of those, I know my equity curve's definitely going to grow a lot faster than taking simple B grade ideas because my risk, right? My risk is going to be a lot less on a B grade idea. Why? Because I'm not going to risk the full 1%. I'll probably risk 0.5% on that grade idea simply because it's a B grade. Whereas A grade and A plus setups, I'll risk that 1% that I have going because I know it works. Okay. So that's grading ideas and why it's important and how it already will increase your profitability by sticking to these two sections of uh, A grade, A plus, and then again, as we said here, if you want to take B grade ideas, at least focus on your equity curve being a little bit for the month. Right. The next thing would be journal. Right. Sticking to your rules and report cards will see your performance go up. Again, with the grading ideas, with your playbook, with having actually a proper entry criteria, then you'll see this will also increase. Your rating for yourself will increase. And there's no reason to lie to yourself on a report card because you want to improve. So the next thing you would be focusing on is your trading journal. So this is very, very important as you will see that I can start to identify, am I making money in my week? Am I making money in my month? Is it because I'm following my rules that I'm making money? Is it because I'm making mistakes that I'm losing money? So, for example, last week we hit $1,500 on Monday. We hit a $200 loss managing our risk. We were hitting a 1 to 3 there, but we mitigated and managed our risk early. So we only took less than that 1% or even 0.25% loss on that position. Then we were up $2,100 on Thursday, Friday, $1,200. So $4,600 profit for the week. I know coming into the next week, I'm not rushed to take a position now because my equity curve for the month is up. My equity curve for the week is still flat. So we're going to still look for an A grade or B plus setup. B plus is just a little bit further and very close to A grade, right? Let's see, journaling your trades, you will start to see your journaling your trades, you will start to see your equity growth in your front of your journaling trades. You will start to see your equity growth. Journaling your trades, you will start to see your equity grow in front of your eyes. You will start to pick up on the mistakes that you make and reflect and correct them. You will also realize that taking the bad grade ideas are costing you money. You will also identify that your strategy, if your strategy works or not, or if you're actually even correctly executing it. That's very important too. So here's just another like a 2022 equity curve growth that we were focusing on. You can see Jan, we had really, really good month. And there are losing months. Keep that in mind. There are months that where you're going to take a few losses, but that's why it's important. If I stick to my rules, I know I'll make money within a month or for the year as well. My equity curve will grow. So we had 0.43% loss in Feb in 2022, and then May down 4%. But as you can see, I mean, Jan, March, and April, we were up again. That's like 36%, 32% already just on those 2 months. So this is not even a massive dip. Then we still continue to grow, having a break even month. Also, barely a loss, almost break even month, again green, and then maybe a down at the end of the year in December. So our equity for the year is grown. We've made money, and we know that we've executed our trades correctly according to our entry criteria. Here's just another chart focusing on the equity growth that some months you will start to have dips, but as long as you stick to your rules, you will continuously make money, right? Tools that you can help your trades. The tools that can help you with your trades, there are many different ones. We use something called Edgeful. This is a site that not only myself and Zach have built, but it's data provided by a lot of other traders as well. So we can, with our strategy and building confluences and ideas, we can actually have edge in our flavor. We can actually have edge in our favor, which is really cool to see. I mean, that's why it's called Edgeful, which is quite funny. But essentially, what we're looking at here is 30%. So, what it's breaking out here for us is Asian range breakout. If it breaks out above the first 15-minute candle, above the Asian range, we'll have a 63% green candle day. If it breaks below, 37% red candle day. Yeah, again, first close above Asian range, we have 56% red candle day, and if it breaks below, sorry, this is below. If it breaks below, we have a 56% red candle day, and then if it could still possibly have a 44% green candle day. That's if it breaks below. So we use this as well as a previous day range breakouts as well. Just some extra stats on our trade ideas. And essentially, this is what we're following and adding to our confluences on a day-to-day basis when we are jumping into positions, right? So, so for example, let's get to some charts here now. For example, so let's get into some chart work here at the moment, combining everything that we've just. So let's get into some chart work here now, combining everything that I've kind of just discussed with you, grading our trade ideas, identifying the entry criteria that we are looking for, adding it to the journal, and giving us the data so that we can see where we need to progress. So here we're just going on a bar replay. This is the trade that we took with our students. Unfortunately, I can't get the edge full stats out now, but I do remember that it was 76% red candle day if it broke below Asian range. So we could see Euro USD really buying up at the stage, but having a bit of a lower high being created. So we're sitting with Edgeful stats being 76% red candle day if Asian range breakouts. We also have previous day low range as well that we can watch out for. So let's see how price develops. We can see we get a nice little breakout. Again, we're not entering our trade just yet. We are trying to find value and our EMA alignment within this position. Okay, so we have EMA pulling down, we have overnight low broken. That is the thing over here. So we can go overnight low, right? Overnight low there. So overnight low has been broken. We can now edge for stats are one in our favor. We're definitely going to be looking for shorts here because we've not only broken the low, we've created a lower high, also cracked below EMA. So let's see how price pulls back now. Right, we're going to find our value, and our value would be on overnight low. So essentially, we're going to be watching this little area here. We have our little supply area, and we're going to wait for our entry criteria. We are being patient. You can see this is on the 15 minutes. So I've not entered my position. And again, this is during London session. Okay, so we are trading between our time sessions that we are looking at. We can see, boom, we are still waiting. We are still waiting, still waiting. Again, what happened? We still being patient. Again, as I said, maybe that setup did not set up during London session. Volume slowed down at about 11:30, as you can see here after 9 o'clock open. What is it now? It's almost 2:30 trading in the session of New York, and we can see prices starting to set up. So essentially, we were wanting to jump in this little section over here. We broke an overnight low. We put our stops at a risk to reward of one. That would be a first TP, 1 to 2.5, which is a really great. We're focusing on hitting 1 to 2s, 1 to 3s, and 1 to 4s. Right, we can extend our TP at that point, and that's the low of the day. We're going to see how price develops. Boom. Okay, we can see EMA touches beautifully. We get a little spike going up. We've entered our position now on the engulfing downwards. And we can see price start to fall quite beautifully to the downside. So now the nice thing is once we've seen that engulfing and that 5 minute little break there, if you guys can see that 5 minute that 15-minute break at the bottom, I can already start mitigating my risk as best as possible because now already once it was a 1 to 2.5 as we discussed. But because I'm managing my risk, I'm only risking, for example, um, either break even or I was risking, $500 on this trade. Now I'm only risking about $150 in this trade. So I'm increasing my risk to reward already. But by this time, I would have set at break even. I would have taken some partials once we've hit our full TP. We could have extended a little bit further. So if I go down to the 5 minutes, right, we extend it a little bit further. We go down to the five. I think I would have closed the rest of my positions, cutting it off at 3R, which would have been around about here at this point. Cutting my position, great trade, aligning everything and all my entry criteria with it. We have flows going bearish because we created the lower high. Let's just go back to where that trade was. There we go. It's about 3.4.5 where we closed off that entry, right? So now what we can do is we are going to take this trade. We're going to go copy image. Oh, sorry. We're going to go here. We're going to copy the link. We're going to go to our trading journal. For example, I'm just using an example. I'll go here today. We're going to go Euro USD, Euro USD. We're going to enter our short position. And again, this is the platform that we've created for our students just to help them journal their trades. We can say that was a win. The risk to reward was a 1 to 3.5. Just give me 2 seconds. 3.5. 3.5. And then you can add the picture of the trade over here. So you can see if I click on that, the entry of the trade will come up over here. So that's a great way to look at it. Profit and loss. Let's say we made $1,400. Trade grade. Because it had everything aligned, and I forgot to mention as well, we also even have our fib tool aligning with us. We can see 61, 71. Now let's count how many confluences we have. So we have Asian range breakout, one, right? Two, we have overnight low being tapped again. Okay, so that's two. So let's count our confluences here at the moment on this position. So we have Fibonacci tool, one, overnight low being broken, edgeful stats in our favor. Two, overnight low being retested. Again, three, we have our value area and demand. Four, then we have a previous higher low being created at this point. Five, again, now we're already in the A grade and A plus setup area. And then six, just to top it off, flows have been bearish as well, which is beautifully that what we can see here going here. And we can see that we've got a 15-minute break at this little area too. So six confluences. What I'm going to do to my journal is I'm going to go A plus setup. I can, write a comment there, managed it well. Well, add it to my journal, and then we can see that, okay, well, it wasn't $14,000. But anyways, we're going to go to report cards, and then we're going to go to our reports. Let's say Jan. And we're going to say, cool, I executed my position 5 out of 5 today. I did really well with A grade setups. I executed that one perfectly to the T. I managed, my psychological state was calm, but I was a bit impatient because the trade only set up in New York. So I'm going to give myself a 3 out of 5. Okay. Decision making process followed or skipped. I followed my plan quite well. I didn't execute before the trade actually reached the criteria. So I'm going to give myself a 4 out of 5 because there was still room for improvement. So now I've graded myself. Now I can see how I've performed this whole week. So I'm hoping you guys understand what I'm trying to speak about here with, again, it comes down to trading plan, getting data on what you're doing, building a playbook, building equity curve and journal system so that you can see if you're actually making money, having graded ideas, grading your trade ideas is very important too. And then again, we can get a lot deeper into it, but this is what's going to help you increase your win percentage by following these rules. And this is why most of you guys do fail because you aren't ready to take these steps. It's a lot of homework for you. Well, to be honest, if you're making R1 million off a single trade, would you do this homework? I'm pretty sure 99% of you would say yes, because that's R1 million. But a lot of people step themselves back from doing anything because they're not making money from it yet. And that's where we need to overcome the laziness. If you want to reach a certain level, you have to be above the average, and the average will not do this. And this is why me and my team are making money, because we're following this rules. But I hope you guys enjoyed the video. What I'm going to do is I'm going to have a part two, and we're going to get scaling into funded accounts, scaling capital, investing, how to build portfolios. So if you really do want that to happen, make sure to like, subscribe, comment down below what you think. Give me some feedback on your thoughts on the trading plan. What else you think you should add? And hope you guys enjoy the video, and we'll take it forward from there. Peace out.